Hey everyone, Jeff Dorman, Chief Investment Officer at ARCA, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset markets, usually following along the blog that we write, which is released every Monday on our website. That's Our Two Satoshis. And as you can imagine, this week we talked a lot about what's going to happen today, Tuesday, November 5th, on election day, as well as with tomorrow's ultimately FOMC meeting, which is probably leading to another rate cut. So, as always, before we get started, this is not financial advice, but it is financial commentary. So, with that said, let's think about what's happening here in the markets. Obviously, last week a little bit of a dicey week. You had not only crypto selling off a little bit, but you had stocks selling off 1 to 2%. You had another blowout in treasuries, 13 bips on the 10-year. We're now about 75 basis points higher on the 10-year yield than where we were when the Fed initially started cutting rates last month. So pretty big move there. Oil got hit, gold got hit. So why did this happen last week? Well, the reality is, as we all know, markets hate uncertainty more than they hate bad outcomes. So if you're familiar with trading options, as you get closer to expiry, the delta increases, meaning you're going to have more of a move. Same thing as you head into the election. The closer we get, the more volatility you get. And clearly, the only thing that's certain is that there's going to be uncertainty. So as we get closer to that uncertainty, it creates a little volatile environment in markets. So not all that surprising. The question is, are we going to see something similar to 2020? So if you go back to 2020, and I put this chart in the blog for those who want to read it and see it, but September 2020, Bitcoin was down 8%. Bloomberg Galaxy Crypto Index was down almost 15%. S&P 500 was down 4%. So same kind of thing ahead of the November 2020 election. You had some pretty big downside moves in September. October 2020, S&P was down another 2.77%. Crypto started to bounce back a little bit. You had Bitcoin up 28. You had the Bloomberg Galaxy Index up 14. And then, of course, once we actually had the winner, markets took off. Over the next 2 months, November of 2020, December of 2020, Bitcoin was up 42% in November, 47% in December. S&P 500 was up almost 11% in November and up another 4% in December. Why? Did the market really want Biden to win? No, I don't think. In fact, I think if you go back to 2020, the market actually wanted Trump to win, just from a market standpoint. But the fact that Biden won didn't tank the markets because it wasn't really about who won. It was about, is there actually going to be a winner, right? Will we have certainty? Can businesses start to spend again? Can they start to hire again? Can they start to plan again, right? As soon as you move a big uncertain hurdle, markets probably go higher. In fact, Deutsche Bank put out a great chart, which I put in the blog as well, talking about the fact that U.S. presidential elections tend to have absolutely no bearing on investments at all. If you look at annualized returns for U.S. equities over each presidency, basically, no matter what, no matter if it was Republican or Democrat, whether it was a favorite or an underdog, markets are generally up annualized basis somewhere between 12 and 17% per year, regardless of the president, right? There's a couple outliers in there. Obviously, Nixon in 1973 with the oil shock. You can go all the way back to Hoover with the Great Depression. You can say Bush in 2001 with 9/11, and then ultimately culminating in the great financial crisis of 2008. So there are some outliers, not really based on a Republican or a Democrat, just based on bigger events that happen. But ultimately, this really doesn't matter. And even if you look at just Bitcoin, you can't really look at the whole crypto market. You have to look at just Bitcoin because it's the only asset in digital assets that have been around long enough to have a couple of different samples throughout different presidential elections. But if you look at 1 year performance or even just 3 month performance of Bitcoin, you can go back to 2012. Barack Obama, Democrat, obviously, 3 month performance, Bitcoin up 90. 1 year performance, Bitcoin up 2,320%. Trump, 2016, Republican, 3 month performance, Bitcoin up 50, 1 year up 950%. Joe Biden, 2020, Bitcoin up 170% over the next 3 months, up 370% over the next 1 year. So again, there's a lot of precedent here that ultimately this stuff really doesn't matter that much. But being a huge event, having a big kink in the curve in terms of knowing that there's going to be something happening today, tomorrow. Obviously, there's a lot of trading going on around it. There's a lot of scenario analysis. One way to think about the short term is, I think most of you who know me know that I don't talk about Bitcoin that much. I generally talk about DeFi and protocols and Web3 and AI and some of the other more fascinating areas of growth in the digital asset market. But if you're looking to play just the event coming up today and tomorrow, Bitcoin probably is the most obvious way to try to express a view, just because the outcomes are a little more certain. So let's go through the four possible events that probably happen this week, right? Number one is Trump wins in a landslide. If that happens, global markets are going to be higher. Bitcoin's going to be probably underperforming the rest of digital assets. You probably see something like DeFi and maybe, um, layer one protocols, even ETH probably does pretty well if Trump wins by a landslide. So Bitcoin will go higher, but maybe not as much as other assets. On the flip side, if you have a Harris win by a landslide, global markets probably down. And again, I'm talking short term. I'm talking immediate knee jerk effect of markets, not longer term. We already described that. But shorter term, Harris wins by a landslide. You probably see a pretty knee jerk reaction lower across global markets. Um, in this case, Bitcoin will also be down, but down a lot less, given that Bitcoin is pretty well established as sort of being irrelevant in terms of government policy. But you probably see DeFi, Ethereum, Solana get hit pretty hard. Bitcoin still down, but outperforms. Scenario three is it's too close to call, and this goes on for days, maybe even weeks, in terms of not really knowing who's going to win. In fact, you could go back all the way to 2000, Bush against Gore. We didn't have a true winner until I believe December 14th. So it was almost a month later until you actually had a concession from Kerry there, and ultimately having Bush be the winner there. So it could drag on for a while here. I think that's probably the worst case scenario for markets because, again, markets hate uncertainty. They don't hate bad outcomes. So if you continue that uncertainty for weeks, definitely going to be bad for all markets. Again, Bitcoin will be down, but down much less than what we'll see in other assets. And then there's a fourth scenario, which is very low probability, but it can't be dismissed altogether, which is an Armageddon scenario, right? This is a scenario where it's so close that literally neither party will ever concede. And you go into January without a president elect. It could happen, right? You could go into a situation where 2 months after the election, we still don't know who the president is. What happens there? Well, as we know, Bitcoin is an insurance policy against two things: mistrust in banks, mistrust in local governments, right? Every single time we've had an event, whether it's the March regional banking crisis in 2023, or you had the Canadian trucking standoff, or you had Cyprus bank implosions, or you had Argentinian issues, or Turkey, you name it. Anytime there's a lack of trust or a loss of trust in governments or banks, Bitcoin goes way higher. This would be the mother of all distrust in governments if we couldn't even get a president elect. If that happens, global markets will be down, but I would envision Bitcoin being way higher, maybe even in the 200,000 range. I mean, Bitcoin would be one of a very few assets. And what would happen there, right? If you lose trust in US government, the dollar gets killed. Interest rates are going to explode. You're probably talking about 10, 12, even 15% interest rates on US government bonds. US CDS default protection will go way wider. You're going to see a massive implosion in markets if we somehow, again, very slim chance, but not zero, that we go into January without a president elect. So in that scenario, Bitcoin flies higher. So that being said, again, longer term, I don't think you're supposed to shift your portfolio too much based on what's going to happen in these outcomes. Shorter term, if you like scenario analysis, there you go. That's likely what will probably happen in a variety of these scenarios. So, with that said, I think the only other thing that's really interesting this week is just how much inflows we had into the Bitcoin ETF. I don't think it was purely organic. I think a lot of it was not really directional bets on Bitcoin. I think a lot of it is just taking advantage of the basis, meaning futures prices way higher than spot prices, which means you can buy the spot Bitcoin ETF and you could sell futures on CME against it and lock in a 10, 12% annualized deal. Bought a TradFi, hedge funds doing that trade. So not purely organic, but I think it does warrant a discussion about whether or not the ETFs are even good for crypto at this point. And what I mean by that is, in some ways it has to be good, right? It's made crypto a little more mainstream. It's made Bitcoin and ETH a little more accessible. It's certainly increased visibility of those two assets. But we can't kid ourselves. The ETFs are definitely a setback for actual blockchain usage. A lot of this interest and inflows into the Bitcoin and ETH ETFs is money coming off chain, money coming from on-chain areas where people have to use self-custody and different services and bringing it back into their brokerage accounts and buying this off-chain. So, as an industry, we should be striving towards bringing the world's assets on-chain, not bringing on-chain assets to Wall Street's outdated rails. So, I think before the ETF hype started in the middle of 2023 upon the BlackRock application for the Bitcoin ETF, most blockchain enthusiasts were focused on the benefits of blockchain being a superior technology: 24/7 settlement, real-time proof of reserves, near 100% uptime, open APIs, low transaction costs, public governance, etc. All that goes away, at least in the short term, due to the popularity of the ETFs. So again, we got a lot going on here with the president and the FOMC and these ETF flows. I don't think it matters longer term. Shorter term, there's a reason this has been a fairly boring year for crypto investing, because all of the energy and excitement has been sucked into Bitcoin around this election and around these ETF flows. So, we'll see. Ultimately, digital assets market has been held hostage by regulation, the presidential election, the ETF penetration. So, regardless of how this week's events play out, the fact that they'll soon be over should be enough to renew interest in broader blockchain investing going forward. And I, for one, am ready for it. Tired of the election, tired of the macro, tired of the ETFs. Let's get back to basics, which is growth of this technology and on-chain usage. So with that said, as always, you can check out the blog on our website, ar.ca/blog. You can read it this week. I'll have next commentary on the election and the FOMC and everything else on Monday next week. And I appreciate it as always. And let's see what happens over the next 48 hours. Take care, everyone. Thank you.